Morning traders, this is Paul with GammaEdge. Today is Monday, the 23rd of May. Let's get started. Please pause your readers, take a read of this. It's important to you, it's very important to us. Make sure you understand it. And when you're done, hit that play button. Taking a look at the cumulative tick, a few things are notable from Friday's action. We had just still a continuation of terrible breadth across the board. This is the 52-week new high, new lows. You can see we actually had a discontinuity in the new lows. Normally this line is very smooth. We had a major shift that corresponded to a major drop in the SPX. We've not seen this often, and this indicates a lot of stocks were being unloaded on Friday. So just be aware of that. The big picture, we continued and then abated. You can see the curve starting to flatten out, and that corresponds to this reversal that we had in the overall day. And certainly, by many measures, we're oversold. But nevertheless, overall, breadth is terrible. We did get some participation into the afternoon from the institutionals. That's always a good thing. Longer term, the historical cumulative tick, what we call the ribbon, is still sloped down, which is a risk-off mentality. You can see the CT, the cumulative tick, did come off the lows of the day, and we need to see a continuation upward, and eventually, if we're going to have any hope of going long here, we need to see this white line start penetrating these moving averages. We're getting very close, very tight here, but just be aware, not the bullish picture that everyone over the weekend would want you to believe that the floor is in. So be aware of that. Taking a look at the overall indexes, the SPX, the SPY, the Qs, and the IWM, we've had some level changes, and I've highlighted those out. We've gone from 3,900 to 3,700 in terms of the largest negative put gamma, and typically when we see that fall away, that does generally pretend to suggest some upside moves, but also note that we had a major expiry, and this could be a simple exposure of that lower level as the closer ones were rolled off or rolled down from 39 to 37. A little hard to determine without some really detailed analysis that we won't get into now, but suffice to say we had a combination of expiry as well as closing of puts on Friday, which has given rise to this. Same thing over here in the SPY. Also note that we've had a shift upward from 450 to 500 in terms of the dominant call open interest, and that's always a interesting phenomena when we see those calls moving out and up. Out again is out in time, up in price, and again this is most likely due to the expiry, but also we did see a little bit of calls being added out in time. Q is kind of the same picture. I'll let you read that, and IWM, not seeing much of any action there one way or the other. Near-term expiries, you can see that today we have negative expiries as indicated by the red integral line here. The key areas, you can see that we closed Friday below some of these key levels. We will open higher than these key levels today, so a lot of this will be out of the money. That could provide some fuel as these people realize there's no chance of these puts being in the money and having profit, especially on the SPY, the Qs, and the IWM. We may see some folks who want to monetize whatever remaining extrinsic value they have because they have no intrinsic value. Key levels are highlighted. Pay attention to those. Put those alerts together on your desktop. Taking a look at the gamma history, as I said, we did see some advancement of COI in the SPY and the Qs. IWM is relatively flat. Overall, I'm neutral on the SPY. I'm short-term bullish. Go ahead, pause the viewer right now, and go ahead and take a deep look here at what we wrote. I think the key takeaway is that we're still very, very broken. We've got a long ways to go. We've got to get above the zeros, and the takeaway for me is caution in the wind here. Flow summary. We did see on the short term, which is the top row here, short term calls being added late in the day, puts being added throughout the day on the SPY. They were added through the midday on the Qs, and then actually puts were taken off, which is a bullish indication. You can see net short term less than 30 days, the calls were relatively flat. IWM, the magnitudes here are really not indicative of one way or the other, but you can see that puts were added late in the day on small caps. If we take a look out beyond 30 days, what we're seeing here is actually puts were monetized. That's usually a good indication, but the calls, even though the magnitude is not very significant, calls were actually closed on the SPY. So again, not a lot of upside demand in the long term on the SPY, only in the short term. The Q is a little different picture. We're seeing some demand on calls in the longer term. We also saw some puts being closed, but somewhat added in later in the day. Again, taking a look here at IWM, magnitudes are very, very low, although you can see we did have some longer term puts being added in there. Taking a look at the SPX structure, go ahead and pause and read this. The takeaway effectively is we continue to see a drop in all of these primary levels. This area, this box that I've got here, which is roughly between 4060 and up here to 4160, is really what we see right now as key overhead, and it's going to take a little bit of work to get through that, but we're seeing all of these levels advance down towards spot price. Sustained bull needs to have price above all these levels. We're not there yet. We've got a lot of work to do to get into a sustained bull. We can certainly plow through these, but key levels that we're looking at overhead, 4,000 level for today, and then pushing upward to this 4080, 4092, 4100 level. On the 0 DTE, you can see where the transitions are. I've got those highlighted here. You can see how we flip back and forth in the zeros here. Typically, we see this whole area as a very weak area, and that's where we are right now. We closed on Friday right here at Circle 4. The level of the expiry today, it's not insignificant, but it's not huge. I think that's important. To the upside, the 0 DTE will probably play a role all the way up to 4,000. Then above that, you can see there really isn't anything pushing us further north. So it'll be the intraday action that has any impact above 4,000, not the expiry itself. To the downside, the 3875 here at Circle 5, and then dropping on down to 3800. Should we do that, you can see there are a couple sticky levels down here. In general, below 38, although I'm not anticipating that, you can see there's nothing really below that also. So these would be the goalposts as far as the 0 DTE is concerned of what we're looking at. The combo, which is the AM plus PM settled, now we're into the June AMs. Huge negative gamma in the overall complex, as we've been saying. This is the 4,000 level. It's got COI, it's got POI sitting here. These are put open interest. This is the dominant for the structure. This is the call open interest for the structure. I'm showing you 4,100 up here. We've got a lot of work to get up to that point. Expected move suggests we're not going to get there today. We always could. We've seen some of these larger numbers being hit, especially in a negative gamma environment where volatility is very, very high. 3,900, and then down here 3,800. You can see the different levels here, and I've highlighted the delta levels also. These are extremely large numbers to get through. Red still across the board on the deltas. Until we start seeing some green here, it's going to be very, very difficult to push forward. I do want to just make a note, now that we've had the May monthlies roll off, you can see, taking a look at the SPX, we're already up here at 28% for the June. The June is shaping up to be an extremely large expiry. Of course, a lot of water to flow between now and then, but just keep an eye on this. The June expiries on the SPX are going to be significant. Taking a look at expiration, this is what is coming off on a expiry by expiry basis. You can see where we are today and for the week. Monday, Wednesday, Friday still significant. Tuesday, Thursday really not playing a role in these things yet. So I'd be watching today, Wednesday, and mostly on Friday. Into the 3-day weekend, we've got the Tuesday, we come right back from the break, and then boom, we've got fairly significant expiry and then relatively flat. And you can see where we are. We've dropped quite a bit. For the June expiry, we were about 100 minus 140,000 on Friday, and so we've come off quite a bit with the normal expiry and also the advance back upward. So we'll have to watch this, but just be aware of the relative levels where we are. The SPX structure, we're down in this area right here at 3,900. You can see the dominant level here at 37. Here's the 4,000 line, 4,100 line. Really, really poor structure. Sure, we can plow through this, and everyone wants to plow through this. I get it. The problem is the structure support to come back down is not there until 4,100. So if we do advance this week up into this area and this doesn't change, there's nothing really keeping us up there until we start seeing calls being built out, and we're not seeing it. You can see here that we're still only at 3,000. Now, granted, it's because we're gamma and this is so far down, but we're just not seeing a big demand in the calls relative to where we are in the downside protection. Just be aware of that. So what's the summary? The market model, longer term, the ribbon is down, continue to play the bounces to the downside, which is what I intend to do, but on the shorter term, looking for a short-term rally. So we've got this mixed picture going on here. We're looking for the instantaneous CT to show that continuation pattern where we continue upward on the shortest of term. That 4,100, 4,160 level in the SPX is probably the key areas there. Flow summary is showing downside protection, longer term bullishness, so keep that in mind. People are still anticipating some volatility in the short term, but some potential moving up in the longer term. Be ready today for the move through 4,000, and if we get it, that 4,100 to 4,160 as the target. And then finally, we're still in a very, very deep hole in terms of negative gamma, high volatility, high negative delta conditions. It's going to make it difficult to stick and hold in up to and through the 4,100 and 4,160 until the structure changes. So that's it for today. If you like today's content, please come and join us at GammaEdge.us. That'll take you to a sign-up page. That'll get you into the Discord. 14-day free trial, all the tools turned on. Great group of traders, great visualization tools. In fact, we just did an update. There's another YouTube video here that I posted over the weekend, and you can see that. Follow us on Twitter, please, GammaEdges with an S. And then here on YouTube, go ahead and hit that like button if you like today's content. And please subscribe, helps raise us in the search engines and makes it easier for everybody to find us. I really appreciate it. So make it a great week, everyone. I am traveling, so we'll do this as I can, but nevertheless, if you have any questions, get into the Discord. A lot of people there to help you, and we'll go from there. So thanks, everyone. Make it a great week.